Welcome to Buy, Hold, Sell. My name's James Marlay, and today we're talking about stocks that are in the papers and grabbing headlines. Joining me today is Prasad Patkar from Platypus and David Wilson from Colonial First State Global Asset Management. David, I'll start with you. The bank inquiry, it's been all through the news. We're going to start off, NAB, buy, hold or sell?
For us, NAB is a sell, not so much because of the Royal Commission. We just think credit growth is slow. NAB has actually announced an increase in costs for the course of this year as well. So with that low credit growth, we sort of struggle to see any growth over the medium term for this stock. So we have it as a sell. Prasad,
bad headlines, low growth. Can you get excited about the banks?
Not really. I think the structural bull market in the banks is over. I agree with David that the volume growth for the banking sector overall is going to be fairly pedestrian going forward. With NAB as well, I think the market's lapped up this cost out story, which I think is a bit of an issue for us, given that NAB's had a checkered history with execution. And at these prices, you'd rather buy a Westpac rather than NAB. You know, that's the sort of way we look at it, and we'd agree with David that it's a sale.
Alrighty, Wesfarmers, it's coming up with a spin-out story, selling coals out of the conglomerate.
Yep.
A new growth vehicle, perhaps in Wesfarmers, buy, hold or sell?
Yeah, that's a sell as well for me. I mean, it's just got it's fairly pedestrian in terms of its earnings growth profile, with or without without coals. It'll be an interesting story to see how it plays out and what it looks like. But I'd rather sell the stock, allow the management to restructure the portfolio, and then have a fresh look at it when we know the details about how the spin-off will look.
Okay, cleaning of the decks, David. Wesfarmers, buy, hold or sell?
For us, the stock's a hold. We think Rob Scott's done a fantastic job just coming in and just reviewing the assets, putting us at a clean set of eyes over the businesses. So we've been impressed with that. He's still got to fix up the Bunnings UK business, and even Coles has still got some issues to deal with, and it's, you know, you're still owning Coles within Wesfarmers. So for us, it's a hold.
Okay, staying with you, Macquarie, making good headlines, just pushed through the $100 mark, the stock, buy, hold or sell?
Now for us, Macquarie's a buy. The return on equity is 16%. That's double the investment banks overseas. It continues to grow its annuity business, and very, very consistent management. So for us, we like the stock. It's a buy.
It seems everyone has got an eye for Macquarie. Prasad, buy, hold or sell?
I agree with David. We think it's a buy as well. The other point, in addition to David's about the ROE being superior to overseas peers, I'd say that the market consistently has underestimated its earnings power. So it starts the year with a certain, they guide to a broadly in line as well, which I think confuses the market a bit, but it's got a consistent ability to surprise the market on the upside in terms of earnings. So we like Macquarie, it's a buy.
Alrighty, let's get out of the spotlight and go for a bit of a dig around. You got something under the radar, bit of growth, something that you like the look of?
Yeah, it's a small cap company new to market called Bingo Industries, which we think is interesting. It was in the headlines up until about a few months ago, and it's just gone under the radar, so it fits your requirement. But it's got a EPS growth profile that's quite attractive. It has exposure to construction, infrastructure construction as well, which we think has a bit of a runway to play out. And it's a stock that's new to market, so that's the bit of a risk about it, that it has to learn to be a listed player. But it's a very high value post-collections infrastructure business, and we like it for that reason.
Alrighty. David, have you got something from the back pocket, something that people might not have cast their eyes on that's caught your attention?
It's one that sort of re-emerged from sort of history. The stock that we've got is Computershare. 15 years ago, it was a market darling. It then went through sort of 5 years of purgatory, where poor acquisition track record. But we think under Stuart Irving, he's actually done a good job in cleaning up the asset base. He's taking out costs, and he's now sort of growing the business quite effectively overseas in the mortgage servicing business. And they're also exposed to sort of rising US rates in the United States and elsewhere. So I think that's one that sort of appeared from sort of out of history, and we like the stock.
Alrighty. Well, look around, dig outside the headlines, see if you can find a few gems flying under the radar.